In today's video, I'm going to show you a play, a strangle play, where you're selling a covered call and a cash secured put on the same exact stock. And this is an extremely risky stock. And this is for you to possibly get into a massive short squeeze on a Bitcoin holding company called SMLR Therapeutics. I'm going to start by saying there is a huge possibility you will not make money on the stock and a huge possibility that you will lose a ton of money, with a okay probability that you are going to make a lot of money, or possibly make a lot of money if the short squeeze actually works. This is not a normal play that I would be showing on this channel, but I'm taking the opportunity to show you how to do a strangle because a lot of people have asked me how to do a strangle. It's going to be on ticker symbol SMLR. I personally got roughly $400,000 in this play alone. So I thought, let me show you what play I'm doing and use this as a perfect example of how to do a strangle if you want some defense or insurance on this play, because you're going to get into this play that's extremely risky. Again, I'm not a financial advisor. This is a risky play, and getting into this play, you got to understand that it's possible that you will lose a lot of money, with an okay probability that you're going to make a lot of money if the short squeeze actually works. And I'll show you how this works. But you buy the shares, you sell a covered call on the shares that you already bought, and the premium is absolutely so juicy on this specific play. And you sell a cash secured put at the same time. And the strangle is basically the share price is in between the covered call and the cash secured put. Don't worry, I'm going to show you literally everything right now. But first, I just want to break down the theory behind getting into a very risky play like this. Read my lips. This is an extremely risky play. And although I put in $400,000 into this play, if I happen to lose a majority of the $400,000, I will not complain. I will not cry. And I'm going to be riding this a very short period of time, a very short window. That window can be a week. That window could be a month. I'm looking for a certain amount of return. And hopefully we will be winning against the bankers. And I'll explain to you right now the theory behind this play. And again, I'm not a financial advisor. Do not blame me if you lose money. Do not congratulate me if you made money. It's your play, just like it's my play. And at the end of the day, we all adults. That's why I want to keep reiterating. It is a huge possibility that you will lose money, with an okay probability that you will make a lot of money on this play if it plays out. This is SMLR Scientific. As you can see, over the last week, it is currently up 27%. And it seems like a short squeeze might just be starting. I'll explain everything to you right now. If you go to SMLR Scientific information, you're going to see something over here that says short float is 21.88%. Currently, this is a $500 million market cap company right here. If you go a little bit lower, the market cap is $507 million as of right now. I currently have in this specific account $320,000. However, I have way over $400,000 across a couple of other accounts. And this company is a Bitcoin holding company. Sure, it does something in the scientific realm, but nobody gives a flying fizzle about that. All you care about is SMLR Scientific holds 3,808 Bitcoin. That's all you care about. And something called MNAV, which means it's 1.39. So if you were to buy the Bitcoin yourself, the NAV would be 1. This is 1.39, which means you're paying 1.4% for 1% of Bitcoin. I know it sounds counterintuitive and it's crazy, but let me show you a different company. This is Strategy, formerly known as MicroStrategy, where practically it fueled most of my retirement. And if you go a little bit lower, you see that they have 576,230 Bitcoin, and their MNAV is currently at 1.94%. So you're hoping that the price is going to squeeze a short squeeze, which I'll explain in just a moment. Then I'll show you a covered call and cash secured put to give yourself insurance and reduce your risk as much as possible by capping some of your gains. So you're hoping that SMLR Scientific is going to run to around a 2 NAV without any problems. And if you're looking at a different company called MetaPlanet, which is a Japanese company, you can see over the last month, it's up 282%, but there's a massive drop over here, right? It literally went up to $15 from, you could even go like this. It literally went from $4 all the way up to $15. Now it took a little bit of a dip, and people are hoping that this is going to go up. Well, if you're looking at this company right here, this is already a multi-billion-dollar company. If I'm not mistaken, $7 or $8 billion, while Sampler Scientific is a $500 million company. And MetaPlanet currently has an MNAV of over 5, which means you're paying a 5x to Bitcoin holdings by buying MetaPlanet. MicroStrategy, you're buying 2x. At one point last cycle, which is never going to happen again because Michael Saylor keeps doing these ATMs to absolutely slaughter shareholders, whatever, this was over 6x. And in November, this was 3.65x. So this is very possible that it's due for a run of 2x. Pretty easily, it can hit a 2x run. If you look at the price of Bitcoin right now, it's at $111,000. So you're assuming that Bitcoin is in blue skies. What does that mean? There's no moving averages, there's no volume, there's no Bollinger Bands. There is literally no ceiling in terms of how high this can go. And if you go to my boy Jesse, I'm a part of his Discord, by the way. This guy is amazing with long options. Like I'm amazing with short options, selling options. He's amazing with buying options. And his technicals are great. A lot of my technicals are based on his technicals, and I just adapted it for myself. So if you guys want a Discord, join his Discord. In any case, he writes, Bitcoin isn't done yet. We still have the final short-term boss at $120,000. Note, I've been spot on with price action this year. He's been very, very good with the price action of Bitcoin so far. And as he's saying right here, and Jesse, I'm very, very sorry I'm sharing your screen. I know this is paid services, but I hope you don't mind because I'm trying to show your genius to people. He's saying the short term based on the Fibonacci, this is a Fibonacci, is 120,000. Then he believes it's going to be roughly right here at 140,000. And he believes that the bottom for this cycle is going to be roughly right here at 160,000. So he believes that 160,000 is the bearish bottom for this specific cycle. So if you believe that, and I'm not telling you to believe it, I don't care. I'm just sharing my thought process of how I made multi-baggers in order to retire. But not all multi-baggers become multi-baggers, and literally you could become a bag holder. So understand that. So based on everything that I'm telling you, that Bitcoin holding companies like MicroStrategy, MetaPlanet, and other ones started taking off. MicroStrategy used to be the only game in town. Now there's other ones, and people are trying to get these multi-runners. Let me explain to you how a short float actually works. Sampler Scientific has a short interest of 1.7 million shares, representing 21.88% of the float, the number of shares available for trading by the public. This marks a 1.8% increase in short interest from the previous month, and the short interest ratio days to cover is 4.3 days. What does that mean? Indicating that it would take 4.3 days of the average trading volume of 481,000 shares traded to cover all short positions. Let me just explain to you what that exactly means. You know how I sell covered calls and you're covering the call with shares? Well, when you are shorting, essentially you're doing, just to make it very simple for you guys to understand, you are saying I'm willing to sell a covered call, but you're doing it naked. You don't actually own the shares. And then to cover it, because you don't think the price is going to go up. And if the price goes up, you need to find the shares somewhere. So you can borrow the shares or you need to buy them in an open market. What happens in a short squeeze, like what happened in GameStop, is the more you're looking for shares to buy, the less the community is selling in terms of retail community. So I bought $400,000 worth. One of my students bought $40,000 worth. Another one bought $1,000 worth. Another one bought $4,000 worth. And then you have bigger players that are buying more than I am. And if enough people start doing this, well, now you have a war between retail traders, myself, you, so on and so forth, and the banks, similar to GameStop. And if you get a short squeeze, it's beautiful, but it doesn't mean you're going to win because they have billions of dollars. But this company is so small that if you pump 10% of the value of the company is 500 million and you dump 50 million by, degens getting into this place, or even less, the price starts shooting up and they have to start covering their calls by lending the shares or buying the shares. And as the price goes up, they have to keep paying more and more money, but nobody's selling. And as the price is going to go up, let's say this goes up 100%. For example, let's say it goes from $45 to $90. Guess what? More and more people are going to start buying the same exact share, increasing the power and the destination of the short squeeze to blue skies. Now that I explained all of that, I'm going to show you how you can kind of give yourself a little bit of insurance with a covered call and a cash secured put, aka a stranglehold on the shares of SMLR. And you could do this for any play you want. I'm just using this as an example. And again, huge possibility you will lose money. Okay, possibility you will make a lot of money. So this is a risk versus reward, and this is not a long-term play for me. This could be a 2-week play. This could be a 1-month play. This could be a month and a half play. This could be a few days. Anything can possibly change. I'll try to let the channel know, but at the end of the day, you're all adults. Let me show you how to play this if you want some insurance and to protect yourself. I currently own 7,000 shares. The very first thing I want to do is to offset the amount of money it cost me to buy these shares. So my average cost for these shares is $44.66. The first thing I'm going to do is do a covered call. Where's going to be my covered call? Let's see what they're offering. I'm going to press trade options. I'm going to see 4 weeks out. This doesn't give you 4 weeks. This gives you 29 days to June 20th. So that's okay. Click June 20th. That's what they have. It's nearly 4 weeks. Press sell call and go as high as possible. The highest call they have is $65. All right, not a problem. Go back and just go to all time. Go to 1 year. So the highest this hit was December 17th on this Bitcoin run, and it hit $75. So $65 is right around here. So it looks like $65 is okay. So now you got to tell yourself, well, if I'm buying it at $46 and it goes to $65, I made roughly 40% on my play, 45% on my play. So you got to tell yourself, are you okay with making 45% stock on your play, not counting the premiums you're about to collect from cash secured puts and covered calls? And if you're okay with capping your returns, remember, you're capping it at $65. You could roll it, you could wheel it, but right now you got to tell yourself mentally, I am prepared to make in the next month 45% on this play. And if you are mentally prepared for that, then go back to trading options. You're going to sell a call 29 days out. You're going to click this right here, and then you're going to go to calculator, and then you're going to take 100 divided by the current share price that you would be buying, which would be roughly, let's say, $45.90 divided by 45.9 equals, and then you would times it by $1.90, 1.9. Okay, so you would collect 4% on a covered call. So all of a sudden, if it hits $65, not only are you making 45%, you're actually making 50% because you're collecting 4% premium, no matter what happens. Preferably, you would love SMLR to go up to $64.99 so you don't have to sell your shares. You collect your 4%, and you're pretty much collecting that 45% in price appreciation. Or maybe SMLR doesn't move at all. It doesn't work out. It doesn't go down, and you still collect your 4% in premium right now, cash money. But it gets even better. Besides for collecting 4% to reduce your cost basis by $1.90, so instead of paying $46, you would really be paying roughly $44.20. Besides for reducing your cost basis with a covered call, you're going to do something else where you're going to sell a put. And you're going to sell a put also for June 20th. And selling a put is you are saying that you are willing to buy shares at a certain price at a certain date. Now you need to get a price that you don't think is going to be called. You don't want to call this price. So there's a couple of days right here. Go back to SMLR, go back to the 1 year or year to date, and see the lowest possible mark. So the lowest possible mark was $30 right here, 29.83 and 32.54. Let's just go back 1 year just in case. This is before the run up. I don't think it's going to get here. So you're playing with this number right here of $29 and $32. So roughly $30. So go to trade options, sell, put, and then see if you can make any money with $30. There's a play right here at $30. This would give you 40 cents. Now, 40 cents doesn't seem a lot, but let's see how much 40 cents actually is right now. You would take 100 divided by the same 45.9 equals, and then you would times this by 0.40 cents. So you would collect roughly 1 more percent. This is a little low. This is giving you like insurance, but if you think about it, if you add 0.87 plus 4.13, you are reducing your cost basis through a strangle by 5%, 5% premium right now, right here. This might be a little bit too low, and you might want to go to $35. Now, $35 is an interesting number, and I'll tell you why. This is giving you a 0.14 delta. It looks good, 81% in your favor. Now, if you're going to take the number of 100 divided by 45.9 times 1.13, you're going to collect 2.4% plus you would collect 4.13%, reducing your cost basis by 6% on this play, capping your gains at $65. It's very interesting to see because instead of going year to date and going to the lows, if you were to just go past month, you see that it literally was trading right around this $35, right? It was trading $35 for the whole month roughly. And then it had this little dip and boom, it went up, right? It went up. So you're hoping that this thing is going to take off right now. So if you wanted to trade this option, sell a put, you would probably be doing the $35 one. But if you really want to be safe and you just want to offset your buys, you would click this one, which would give you a small amount, but it's okay. So you would be doing the 35 or the 30. This is what I would be doing. So if you wanted to finish this play, all you got to do is click on this. You will do your contract. $1.15 is right between $1 and $1.30. I would probably try to get 1.2 to try to increase the amount of premium that you're getting. You would press review order and then you would press submit. I'm not going to do this. I'm just showing you how to do insurance and a strangle on a stock. And if you wanted to sell a call, you go to sell call. You would pick the highest possible strike because you're hoping that there's going to be a short squeeze. You would then click on this. It's already in between. I would probably try to get 1.9, right? Try to go a little bit higher to collect a few extra pennies. You would press review order. You would press submit. So now you would own the shares. You would cap your gains at $65 without taking into account a roll. And between the covered call and the cash secured put, you would be reducing your cost basis in premium by 6%. That money is yours to keep right now, no matter what happens. You would love the shares to go up to $65, get out of the play, or just about get out of the play, collect your premiums. But you would also be okay if SMLR would stay at $46 because no matter what happens, you collected your 6% in premium because you are strangling the shares between a covered call and a cash secured put. Sure, you want to maximize your money and make as much money as possible, but you would also be okay if you don't maximize your profits, but just collect a 6% premium for 1 month play. It's not bad. I want to stress one more time. This is a high risk play because if Bitcoin goes between 111 and 100, this is probably going to go down. If the banks can outplay retail, this is going to go down. If it stays constant, nothing's going to happen. This is probably going to stay exactly where it is. And a month from now, you're going to collect your premium. But this is a high risk, high reward play. And I'm not giving you advice. I'm just showing you how to give yourself some insurance and some protection when going into a risky play. But if you don't take any risks, and I'm not telling you to do the risk, but this is what I had to do in order to retire, you're never going to make multi-baggers. You're never going to make, 20, 30, 40% on your money in a month. That's absolutely insane. And some people are making more than that. The people that caught Metaplanet, that stock that I showed you earlier, check this out. Metaplanet, literally for the last month, it's up 282%. Guess what? People did the same exact thing with Metaplanet, and you have retail investors that are absolutely piling in to the stock. Look, it just started going up. So it was down 40%. It went down to $9, and all of a sudden, people are starting to buy this back. And this is literally what happened. If you go back to GameStop, you could see that there was a short squeeze that literally went from $1 all the way up to $81. But then there was drops, right? $81 went back to 13. 13 went all the way back up to 66. 66 went to 38. 38 went to 58. 58 went to 40. 40 went to 50. 50 went to 44. 44 went to 57. And then, GameStop gave up, and you know how that ended. So right now you are praying for a short squeeze, but it's not just a prayer. It's not just a Hail Mary. It's based on something of what's currently happening with retail. And if you're following retail like I am, the Twitter accounts and what's happening online, a lot of people are hoping, praying, and pushing this. And now it is literally a war between retail and bankers. And we're hoping that this is going to go up. And I'm trying to give you the biggest possible position of capping some of your returns, but also a defensive play and insurance where I honestly think worst case scenario is this stays steady over the next month and you collect your premiums. However, it could not go steady and it could go down, right? It could go down and you might lose. You could also just sell a covered call. You could also just sell a cash secured put if you want. I don't have a covered call and I don't have a cash secured put because I want this to run as much as possible, whether it happens in 3 days, a week, a month and a half, 2 months, and I want to get out. The get out part is the tricky part, and I'm not greedy. I don't want to get slaughtered like a pig. I'm going to get out once I make a certain amount of money. I'll keep everybody posted. Guys, thank you so much. If you enjoyed the video, hit me up in the comments down below. Soon my website is going to be up, and a lot of people have been asking me about coaching, courses, webinars, and other things. I will have all of this up in June, and I'll talk to you guys more about it on this channel. Again, I'm not a financial advisor, and watch this playlist right here. If you have any more questions about options, I break everything down between rolling and wheeling and covered calls and cash secured puts and everything else. Have a blessed day.